Steve, I want to go to you first. Your take, sir.
So think about this battle against inflation like a WWE match, right? Where a guy's down on the floor and the ref starts counting 1, 2, and then he gets up. He goes 1, 2, and then he gets up. We finally got one down, okay? Not only do we have the better than expected CPI number, we now have together with that a better than expected PPI or wholesale number, which means the Fed can start counting. What do I mean by that? The Fed has said it wants to see several months in a row of improving inflation numbers. And this is a good number from the following standpoint. I'll give you 3 reasons here. First, we have this trade decline, which is the margins of wholesalers and retailers, and that suggests some easing of pressure when it comes to the supply chain. The same with transportation and warehousing. That was negative. You had a big bump. The reason why the headline was even as high as it was this 2.7% increase in energy prices. We had a bump up in energy prices in October. It looks like they have been stable, at least in November. So that's probably going to go away. Another reason why this is a flattering report is you look up the chain to the processed goods for intermediate demand. They also moved down. They were negative. So getting a little disinflation into the system here, it certainly has an appearance right now. Wholesale prices can pass along to consumer prices. The question now becomes, will those on the consumer front, pass along lower prices or at least ease the price gains that have been out there? This is a start, Andrew. It's not the beginning. It's just the start.
Steve,
not the end.
You do know WWE is like fate, right? I mean,
no.
You mean like a boxing match where someone goes down and 1, 2, and then he, right? I mean,
you're not going to tell me about Santa next, are you, Joe?
There may be kids. Kids like the
Joe.
Sorry.
What are you talking about? What are you talking about? Nela, what do you think of this? And do you think the Fed is going to actually move on this?
I think it's good going into Thanksgiving week to have some more good news that suggests that inflation may have peaked. Whether they actually change course, I don't think so. But many economists use the PPI as an early indicator of what the CPI looks like, much as Steve mentioned. So that movement of wholesale prices into retail that actually consumers face. And it may counteract some less than good news that we saw yesterday from the New York Fed on consumer inflation expectations, which rose on every time interval, 1 year, 3 year, and 5 years. So consumers are actually expecting higher inflation. That's not good news for the Fed. So these two reports together, I think, will be closely watched.
But a pivot is taking place here? I mean, that's the question. I think this morning.
No, there's going to be a pause before a pivot. We may see a slower rate hike in December instead of 75 basis points, 50. I think that's been suggested. It may already be priced in. But I think, in my opinion, we are far from a pivot. Until we get a pause, a timeout on the field, we're not going to see the Fed stop hiking.
Rick, what's your reaction to that? I know you've been calling for a pivot.
I wouldn't call for a pivot. I would just stop paying so much attention to the Fed and start paying attention to markets. I think especially now that the Fed's on kind of the contrition route, they're trying to do the right thing. They're trying to reverse some bad decisions. They're trying to gate some huge amounts of government spending that seeded inflation. I think a better question would be, hey, Rick, do you think 10-year note yields have peaked? Do you think long maturity yields have peaked?
Hey, Rick.
And I would say,
Rick.
YES.